How often in your life did you think, if I only had a crystal ball, I would be so rich? In this video we show you two of these crystal balls, because predicting stock price developments is possible, and as well as using it for your benefit. Hello YouTube, my name is Till, and on this channel you learn how you invest intelligently and easily and how you build a fortune even if you don't want to put too much of your lifetime into this topic. When you're new here, click the subscribe button and don't forget to ring the little bell for not missing any new videos. I was thinking about this topic already when I was a teenager and read the newspaper. At that time, they still printed the stock prices from the past 2 days in the newspaper. I remember daydreaming about how it might be possible to find a way to predict the price change from one day to the next and how much money one could make of it. 30 years later, I have to say, I still am not able to predict every stock price development or even most of the stock developments. And I don't think that there is any person in the world who is able to. But this isn't required at all. You just need to be able to predict some stock developments. Imagine you're at a racetrack for horse races and you would want to place some bets. To make money, you wouldn't need to predict how every horse finishes. It would be completely sufficient if you would know in advance how 1 or 2 horses finish a race. The same is valid for the stock markets. It is absolutely not required to be able to foresee what happens to every or even most of the 10,000s of companies out there. It is completely sufficient if you're able to predict with some certainty what happens to a few of the businesses. Interested? Then let's start. Crystal ball number 1. Benefiting from Mr. Market, his mood swings and the difference between price and value. The first crystal ball that you can use is an analogy that was created already more than 70 years ago by the inventor of value investing, Benjamin Graham. In his famous book, The Intelligent Investor, he suggests to view the markets as a silent partner, which he named Mr. Market. This silent partner offers you prices for your stocks every day. You can buy stocks from him for these prices, or you can sell your stocks to him. The thing about Mr. Market is that he is suffering from mood swings from time to time. Sometimes he's in a really bad condition and offers you ridiculously low prices. Then you should buy stocks from him. Other times he appears to be insanely optimistic about everything and he offers you extremely high prices. Those are the times when you can sell your stocks to him. Most of the times you can just ignore his offers. The trick is that you need to figure out when he's actually in a really bad mood and what actually a really cheap price is. We explained this in the video about price versus value that is linked here in the corner. There is one thing that you should write down in capital letters over your bed or your desk. Over the long run, price will always follow value. So, when you find the point in time where Mr. Market's offered price is way below the value of a business, you know that there are 2 options that can happen. Number 1, the price will catch up with the value. This is what we're searching for. Or number 2, the value will deteriorate down to the level of the price. This could also happen, but to be sure that it is not happening with our business, it is important that we only buy businesses that are very strong and that have a great and honest management, and that have a wide moat around their economic castle that prevents economic intruders. The topic of the moat is very important and will be handled in another video that I will create soon. So, in a nutshell, to predict the stock price, you A, need to figure out the inner value of a business. We will show you how to do this on this channel. Then B, You wait for Mr. Market to become very pessimistic about the future. And then see, you finally buy a truly great company with a wide moat for a price that is far below the intrinsic value. Then you just need to wait until the price catches up with the value and from time to time check that your company is still a great business. Crystal ball number 2, the development of businesses. What a lot of people who invest in stocks seem to forget is the fact that a stock is always a share of a business. And when you're buying a stock, you buy this share of the business and your share in the future development of the business. In principle, most of the businesses try to grow. They try to develop new products, they try to find new markets and further customers. And they try to sell more goods, etc. to become bigger and make more money. Not every company is successful with that. The competitive and destructive forces of capitalism are tremendous. You wouldn't believe how many companies actually fail one day and go bankrupt, or they cease from growing, or they are bought by other and stronger companies. Do you know how many of the founding companies of the Dow Jones Industrial Index are still included today, as of March 2021? Not a single one. The last one to leave the index was General Electric, that was removed in 2018. The key is to be able to predict the development of the underlying business. This is possible to a certain extent for some businesses. Like for crystal ball number 1, you also need to search for truly great businesses here. If a business has a wide moat and a management that is constantly working on widening it, it will be able to defend it from economic intruders, and it will be much more likely to grow in the future. Try to understand why the business is strong and what they are doing to grow. If they are constantly trying to develop new or improved products, if they are constantly searching for new ways and new channels to market their products, and if they are constantly trying to improve their costs, and what they are doing to support their employees to become better. Some companies do these things much better than others, and those companies will be the ones to succeed. As you learned before, price follows value. When the business grows, the value of the business will grow in lockstep, and so will the price of the stock. And this is something that you can predict. In a nutshell, A. Do your homework. Search for and find truly great businesses that strive for becoming better and growth every day. B. When you're able to predict for a business that it will grow and be much bigger and stronger and spit out much more free cash flow in 5, 10 or 15 years from now, you can be certain that also the price of the stock will follow. So, even though that these 2 crystal balls are definitely not from a fairy tale, the great thing about them is that they actually work. A lot of investors in this world already used them to make a fortune. I'm looking forward to your comments and opinions. Drop them in the comment section below the video and let me know what you think. When you liked the video and when you want to know more about how to build up a fortune and which other effects there are that will support you with that, hit the subscribe button and ring the little bell for not missing any new videos. The links to this topic you will find as usual in the box below the video. I wish you a lot of success for your investing activities and see you in the next video.